in a hot housing market, it's not easy to get a good deal. But once in a while, you may see a good deal priced under 200,000. Currently in America, the average home price is about 350,000 or so. So if you can get a house under 200,000 or under 150,000, that's a great deal, but every deal has a little bit of a reason. And for many of these that are priced at that range, the reason may be that it's a cash only deal. And it may be cash only because maybe you own the land, but it's a mobile home, an old mobile home where the banks will not give a loan on it. Maybe there is issues structurally or with the inspection of the home where, again, a bank would not give lending on it. So it's a higher risk property, and therefore it's priced accordingly based on that risk, because no one's going to give a property that's worth more away, especially in good times. So you have to be honest with yourself. But as an example, if the land that you're going to own is in a good area, and as an example, if on that land sits a mobile home that's older, but you could make work, or you could price in tearing it down and putting a new one, the way to buy that property, if you don't have the cash, would be a possible personal loan. A personal loan is something you can get from the bank if your credit is good and if you have sources of income to justify the loan. You will need, I think the maximum you can get from a personal loan is $100,000. And then you would also be paying a higher interest rate, sometimes between 7 to 16% interest. And usually you have to pay them back within 8 years or so. So it's not going to be the same payment as a 30-year fixed mortgage because you're paying it back sooner. But the good news is, even though it's a higher interest rate, being that you are paying it back within 8 years or less, you're not going to pay as much interest to the bank over the long haul because, it's only for 8-year period. So, that could be okay. It's still going to be a little bit, still going to be, they're going to get their percentage, but it's something to work with. The other thing is, you can get that, plus you can get a 401k loan. You can take up to $50,000 out of your 401k retirement plan, and you can specifically take it out for a primary residence, and you can pay that back over the course of 10 years. If you just take the 401k loan out without justifying it as a primary property purchase, then you have to pay it back within 5 years. So that will determine your payment that you pay out of every paycheck to repay that 401k loan. So between the personal loan and the 401k loan, there's $150,000. Now, again, this is assuming you have a job. This is assuming you have credit. But again, if you don't have those two things, you probably shouldn't be buying a home because you have other financial problems. And again, both of these loans come with risk. Okay, the personal loan, again, it's higher interest rate and it's a higher payment per month. The 401k loan, it's not a bad deal, but the negative of that is if you lose your job within the period you still own the loan, you have to pay it back immediately, or you're charged an additional 10% fee on top of your income tax that you would then have to deduct out of that portion that you took out. Plus, you don't have it in the market if the market does well or average. So that's something you have to consider for your retirement. But look, we're just brainstorming and we're saying, look, when you're in a hot housing market and you're trying to get your foot in the door, if it makes sense for someone, but these are some riskier things because these are not the standard property. This is not standard loans, and they may not appreciate like a standard property. So you have to understand you're taking a higher risk. But for some people, they may be willing to take the risk, and it's your money, it's your life. So think about it, but give a lot of thought and research to it. That, if you find a property under 200,000 or under 150,000, if you qualify, you can get a personal loan up to 100,000. You could take out a 401k loan up to 50,000, and there's 150,000. Now, again, hopefully you still have cash reserves, because I would never tell you to buy property without cash reserves. And certainly this is a higher risk thing, like I've stated a few times now. So just give it some thought, but I figure I'd give you a video to share some things I've looked at. I haven't done them. I did at one point in my life take out 401k loans. So, I I've paid them back. And so, that's something, it's an option. Either way, I hope my videos help you in some way. They inform you, they inspire you, they entertain you. Click that subscribe. Click the blue join button you want to support the channel. Click the thumbs up. Leave a comment below. Check out my playlist. Thousands of free videos. Remember, show up. Why? It's 90% of success. Most people won't even do that consistently. Next, remember, take care of yourself. Why? Because if you don't take care of yourself, even if you do well financially, life's not going to be worth living. And even when you take good care of yourself, life can be tough to stay inspired. I mean, we have bad days. We have depression. We have sadness of life. So all you want to do is make your suffering less. And so live live below your means. Don't have too much stuff where it causes unnecessary stress. And don't neglect self-care, and don't neglect putting in some work to your life, because if you think like just not doing anything is going to solve your problem, it's only going to make your life worse. You're only going to be more depressed, more broke, and more angry. So you got to do something. So figure out what you can do. And, the more you live below your means, the more you can do things you're a little bit more passionate about, the less life will suck, and the more you'll feel inspired. So, just make your life better. No perfect life. Thank you for watching. Hope my videos help. See you in the next one. Peace.